they call pass-through, and you'll hear a lot about this. Hey, these pass-through entities, they're avoiding all their taxes. And I help people promote or start or create S corporations, because that's the way small businesses should be run, because it limits your tax burden. What happens is a lot of people will start an S corporation, do not really understand how it works and what the tax implications are, and then just go about not paying their taxes, what we call the payroll taxes. And this is a problem with the, and let's just open up the, let's open up the story. Okay, so the IRS overlooked billions in taxes from S corporation execs. When they talk about billion executives, they're not talking about the big company executives who are making all this money and, you know, they get all the golden parachute and, you know, all the, that's not who they're talking about. When they're talking about S corporations, they're talking about people who own a company, single member S corporations, the pie companies, the law firms, you know, I shouldn't say that because people think lawyers make a ton of money, and they don't. But any kind of business, roofing, any kind of business that you could think of. Most small business people, if they're a corporation, or something, you could be an LLC also and claim an S corporation. They will create an S corporation. Okay, so actually, what I'm going to do is I'm going to go back here because and the S corporation is what they call a flow through. What they mean by that is the S corporation doesn't pay any taxes. So when they say, you know, corporations don't pay taxes, they're avoiding taxes. No, they're not avoiding the tax. They are paying the tax, but it flows through to the owner. So corporation, an S corporation, let's call it S corporation. S corporation is a, let's say it's a plumbing company. And the plumbing company has several plumbers, and they pay the plumbers on payroll. The S corporation plumbing, pays payroll. The proper way to do this is to put the owner on the payroll also. So the owner is paying taxes. He is paying his Social Security tax, his Medicare tax, income tax from a check, like everybody else who is an employee of that company. The other plumbers that work there, they're also getting a check, and they're paying Social Security and Medicare and income tax from their check. It's deducted and paid to the IRS for every pay period. And the owner is just like everybody else. They get paid. They're just an employee of the company. Because remember, companies, this S Corporation Plumbing, is a separate entity than the owner. It's not the owner. The owner owns it, but it's a separate entity. So the owner should be a employee of that company. What a lot of people do wrong is that they begin an S corporation or an S LLC, a designated subchapter S, because that's what we're talking about here. It's a subchapter S of the IRS code that allows for this flow through of taxes. And again, LLCs could also designate themselves an S, subchapter S company. And so what a lot of these companies do wrong, when somebody will start an S corporation and then think, I don't have to pay payroll taxes. But in reality, what happens is if you're not on the payroll and you take distributions from the corporation, then you must pay self-employment tax. And the self-employment tax is roughly equal to the Medicare and Social Security taxes paid to employees. So what an employee pays these Social Security and Medicare tax and splits the cost with the owner. So the employee pays 7.5% roughly, and the owner pays 7.5% on their behalf. So now that's 15%. So when owners do not pay themselves as an employee, they are supposed to take a self-employment tax. And that's, again, roughly 15% of whatever your income was. You pay income tax on your income, and then you pay self-employment tax on that income. But what a lot of people do wrong is they just don't pay the self-employment tax, and they take this distribution. And so that's what this is. I wanted to kind of paint the picture here about what's going on with the complaint that the IRS has.